Hello traders, Gary Wagner here, approximately 10:10 in Honolulu, 4:10 in New York City. It is Monday, the first day of the week on September the 10th, 2012, and this is the daily report for gold and silver. As we witnessed an incredibly strong week last week, we do have the precious metals under pressure this morning as we watch gold and silver trading lower on the day. Currently, we're down approximately $10 in gold. As you can see, current print, 1725.78. We have had a low of 1724, so we are near the lows of the day, and a high of 1739. Silver, also under pressure, currently trading off about almost 1 full percent, trading down about 32 cents on the day. The low is 33.18. The high is 33.99, and you can see current print 33.38. So we do have both the gold and silver market under pressure this morning. You know, traders, after going to these 6-month highs that we received when the market broke above 1735, there can be no doubt. Today, what we're witnessing is some profit taking. It is a corrective pullback, and the question is, how much of a pullback will we see? And the big question is, should we look to pull profits here, or should we simply tighten our stops and see where the market wants to go? We have a lot of fundamental data coming out of the marketplace this week. FOMC meeting, that's scheduled later on. We've got the German courts ruling on the legality of the bailout itself in the EU. And then we have the finance ministers meeting. Also some news out of China that's a little bit supportive of gold, talking about monetary stimulus, that they will continue that, and some public works that they're doing. All in all, let's look at the technicals, because to me, math is a much more pure science in terms of being able to dissect it, understand it, and work with it. When we consider the fact that this market is truly moved up, and let me go ahead and blow this up for us. This market is truly moved up when you consider that this last low that we had, as it traded within the sideways band, we were down around really the 1530 area right in here. And if we consider 1530, of course, up to 1730, you've got a tremendous move in the marketplace. I mean, that is literally a $200 move from the lows of, call it May and June, to the highs of where we're at now. When we consider that, one thing that we might want to do, of course, is to create a Fibonacci retracement. And the reason for doing that is going to be to ascertain, if the market comes down, where in fact might it go to. So let's do that now. Now, traders, what I've done is I've created 2 different Fibonacci retracement areas. The first one, of course, is going to be from this low back in May and June, 1520 to 17, call it 1744. That's our longer retracement, covers this low to this high. Second retracement that I'm going to do is just this last rally, and I'm pegging it from about 1580. I've got it at 1584, also up to the record top. Now, when I do that, there are 2 areas that we want to take a look at and be cognizant or aware of. The first is the longer of the 2 retracements, the 23% area, 1693. The second area that we want to kind of note right now is 1706, and that's the shorter of the 2 retracement areas. My sentiment is, if we see continued downside pressure in the precious metals market, specifically gold, I would look for this correction, this corrective wave, to take us anywhere between 1706 and 1693 before returning to another impulse wave like this. Traders, you know, with all the fundamental news that's going to be forthcoming out of this week, we could see some fairly wild gyrations in the market. So here's what I'm thinking, and here's a couple of suggestions. We know that we really want the market needs to hold support really above this 1700 area. As you know, we pegged 1706 as a pretty critical area. Next area, 1693. Our stops are currently at 1680, and that should protect us to any kind of downside activity we see for the long term. And when I say the long term, I'm talking about being able to ride a position through the impulse waves itself and weather the corrective waves, of course, 2 and 4. 2 can be a fairly deep or strong retracement, though. And if that's the case, we've got to have some sort of protective stop, which we do. For those that really want to pull profits and not leave anything on the table, of course, the reciprocal is that you're not going to position yourself ever again with 1636 as your long. But for those, you might want to consider putting your stop at around 1705. Now, my sentiment is, though, if you put it at 1705, the likelihood is those are the areas, the lows that it should stop at. So if the market has in fact stalled out here and comes down, it's probably going to come down right in that area. So it's probably going to stop you out on the lows and then move back up. And so with that in mind, you have to kind of weigh those variables, and I'll leave that up to you as traders as to which you think works best for you. For right now, our stops are just below 1680. I am more of a long-term trader in terms of I want to make recommendations to my subscribers that are going to maximize profits. So 1680 for the time being will work. Now, as far as silver goes, silver has been such a workhorse for us in terms of providing us with really good profits. As you can see, we're still looking at short-term Henkin charts. You can also see that when we take a look at the low that we got during the day, you can see that it came right to this support area right here and is trading off of that area right now. Does that mean it's going to stay there? Well, I don't know, but I will say this. If we do not hold support in this particular area, which is around 33.28 right in here, the next real level of support is going to be at about 31.90. And you can see just above it, you can see these bottoms here. So it's a supportive area of silver. What I'm trying to say is that we want to see how the market holds out, but we've seen such a dramatic rise in silver that if it breaks through, say, this first line right in here, it's probably going to head back to just below $32 an ounce before returning to its upward path. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.